Hey everyone, welcome back to the channel. So Purpose Investments, a popular ETF fund manager in Canada, is unveiling or launching two new single stock yield share ETFs, one for Meta and one for AMD. So if you look at their lineup, now they have, it's about 9 of them they have now. So they have Berkshire, Google, Apple, Amazon, Tesla. A couple of months ago, they launched Microsoft, NVIDIA. Now they have AMD, an AMD one and a Meta one. So the stock symbols, and these are Canadian listed, is YAMD for AMD and YMET for Meta, or YMET. So what are these single stock covered call ETFs? Well, I encourage you to read this article here where they talk about the key benefits. I think that this paragraph here is really fantastic to describe what these ETFs are designed for. So these ETFs focus on holding a single stock, Meta or AMD. They implement a covered call strategy, so implementing a covered call strategy and applying moderate leverage, it's 25% leverage, to generate monthly tax efficient income. So the reason why they're writing tax efficient income is because covered call premiums in Canada are classified as capital gains, which is 50% better than regular income. So this combination of strategies seeks a unique blend of growth driven by the performance of the underlying stock and income collected from those covered call premiums. So as a result, investors may benefit from both capital appreciation and steady income, making yield shares a unique investment option for income seekers, but also growth-oriented and long-term investors, right? So this is a perfect blend, in my opinion. That 25% leverage gives you a little bit of growth in there as well, maximizes yield as well, and really is designed to offset the yield return trade-off that is normally present in any covered call strategy, right? We know that when you're writing covered calls on anything, you're limiting or capping your upside, right? If the stocks are going up and up and up. But if you have modest 25% leverage, that helps to make up that difference. So it's fantastic. You have the Meta one here, everyone. And in terms of, they're brand new, so they didn't declare their first distributions for the Meta one or the AMD one. But Purpose has advised me that the estimate, this is an estimate, everyone, big disclaimer here, this is an approximate, that the first distribution could be around 15 cents a month for Meta, which translates into annually $1.80 for Meta, and about 20 cents a month for AMD, which is $2.40 annually. So it's very easy to get an estimate of the yield, right? You just take the annual $1.80 for Meta or $2.40 for AMD, divided by the current stock price, times 100, and you'll get the approximate yield. So these are very interesting, right? If you really want to invest in Meta, but you want income, because Meta has barely a tiny dividend, right? It barely has a dividend. AMD does not have a dividend at all. This is a great way to do it, to get that consistent monthly income. So if we look at, for example, their most popular one, the Tesla one, stock symbol YTSL, and we look at the monthly distributions, you could clearly see a very consistent trend. So Tesla, for example, the Tesla one, YTSL, started at a little over 30 cents a month distribution. You see that it's been very, very consistent for quite a while. Then they raised it to 35 cents. Then they raised it to 40 cents. And this is because Tesla stock has been going up and up and up in this period. And then there was a big decline in Tesla stock approximately this period, early 2024. First quarter of 2024, and you see that they reduced the monthly distribution a little bit to 30 cents, which it has remained. So if we take another example, NVIDIA, which was launched maybe 7-8 months ago or something like that. It was launched at the beginning of the year. They started their monthly distribution at 17 cents, but it's been going steadily up every single month because NVIDIA has been on a tear, right? Same thing for Amazon. If we look at the example of Amazon, which has been there for a while, since the end of 2022, started at 20 cents a month. Then they raised it to 25, then 30, and now it's at 35 cents. So it's pretty obvious that looking at the behavior of the other Purpose yield shares, is that if the stock keeps going up and up and up and up, it's possible and most likely that the monthly distribution will also go up as well, because we know that if there's more net asset value, there's more shares, well, you can make more covered call premium. So the major two factors that determine the monthly distribution, everyone, is the volatility of the stock. The more volatile the stock is, the higher the distribution yield, and the proof is in the pudding, right? You have Berkshire Hathaway, which is very low volatile stock, is obviously going to have less yield than the Tesla one, for example. So this is why the AMD one, for example, is probably going to have slightly more yield than the Meta one, because AMD is a more volatile stock. But it's not just volatility, it also depends on the net asset value. So if the stock price keeps going up and up and up, that could help also to move the monthly distribution upwards as well. In terms of the actual covered call strategy, it's going to be the same as the other ones. So yes, there's 25% leverage on the whole structure of the fund, but they're only writing covered calls on up to 50% of the portfolio, right? So half of the portfolio, you're capturing the full ups and downs of Tesla, for example. That goes for the Meta one and AMD, right? It just depends on the stock. And but it doesn't mean they're doing covered calls on exactly 50% of the portfolio. It's an approximation. This is an actively managed covered call strategy. And if you actually go to portfolio breakdown, I actually love that Purpose has posted this, that you can actually see the status of the covered calls, right? The moneyness of the calls. So what they do is they stagger the calls. They write several calls at different strike prices. You see the option moneyness here. So just for example, if we take Tesla, for example, you see that right now, the calls that are written as of November 5th, there's 21 covered calls written. They're all expiring less than a month. So they typically do weekly or monthly calls. So they are, short dated calls here, call options. You could see that right now that for the Tesla one, a little over 55% of the calls are in the money. So that means they're going to be exercised. 27% are at the money, which if they remain that way are going to expire worthless. And then you have other percentages here, 4% out of the money, still 8% out of the money. So these calls right now would expire worthless. So hopefully this video has been informative for you. So this is a great way, everyone, to get access to single stocks that you really like, but you're an income investor and you want monthly yield. In terms of the details of the covered call strategy, I did discuss it with Nick Murch, who's the portfolio manager. He's the one who actually manages all of these Purpose yield shares. I strongly recommend you watch this video that we filmed 9 months ago, and we talk about the details of the covered call strategy. If you want more details about Purpose's view on covered call strategy, why not just buy the stocks themselves? Is an all-in-one type of solution coming now that they have about 9 of them? Why don't they just do an all-in-one ETF that has all of them? So listen to what he says about that if you're interested. And also the monthly distribution policy, we discussed that in detail as well. So I'll put this the link to this video in the video description below if you want more details about it. But yeah, another 2 yield shares launched. So tell me what you think about this, guys. Are there any stocks that you want access to in the yield shares suite? Let us know in the comment section below, because Purpose will read these comments. So it would be interesting to know your opinion on which ones you want to see next. So I hope this video was enjoyable for you and you learned something. Give me a thumbs up. I would really appreciate it, and see you next time.